Today I want to talk about a TradingView strategy that exits a position by laddering out, selling at predetermined trailing stops. The goal of this strategy is to lock in profit during a winning trade and reduce loss on a losing trade. Let's say we entered a trade here, or this candle represents an average of multiple entries. A trailing stop loss follows price up and sells a portion of our position at each of 3 significant drops. Let's add this to a chart and see how it works. Open up the Indicators menu in TradingView. Search for the word Exit. This TradingView strategy is called Exit Strategy 3 Trailing Stops. Once applied to your chart, open the Strategy Settings menu. You will notice the bar index of your first entry defaults to 0. You will need to find the index number of the bar that opens your trade. Begin by opening the Object Tree and Data window on the right. Be sure to select the Data window tab. The last line of the exit strategy values will be the bar index of the candle your mouse is hovering over. Move your mouse to that opening candle where you want your buy order, or average cost of the position to be. Copy or remember this bar index number. Enter that value here. You should see your initial entry order and the rainbow-colored indicator bands. If nothing shows up, try increasing or decreasing the bar index until you see something like this. Now let's open the strategy tester to get a sense of how well our present configuration performs. Here we have a net profit of 24%. But bear in mind you will want to add your commission fee and anticipated slippage in order to get more realistic values. Let's take a close look at what's happening. You'll notice your first trade executes at the yellow band. Your second trade executes at the orange band. And your last trade executes at the red band. But how are these levels defined? Reopen your strategy settings dialog and notice the first trailing stop is set to 3%. If price drops 3% from the green line, this first sell order is intended to close 30% of the total position. The second exit in this example is set to execute at a trailing stop of 7% below the green line, and our order size is set to 50% of the remaining position size. The third and final order is set to execute at a trailing stop of 10% and will close the entire remaining position. The order size percentages we have defined here are fine for this example, but you will need to adjust these values to fit your own trading style and objectives. Assume that every asset you trade will need some adjustment here, and do not expect the default values to just automatically work across the board. For example, here we have changed most of the values, and you'll find we stay in the trade longer. And these changes will affect the backtesting results, especially the profit percentage. Do extensive testing to understand how this strategy performs under various market conditions. One way you can safely test a TradingView strategy like this is to use the ChartObserver website. With a free account, you can test your strategy on cryptocurrency across most of the Coinbase-traded USD pairs. Everyone gets $10,000 in play money to safely make these simulated trades with near real-time price data. The site will track those trades when you send them using strategy alerts from TradingView. If you do really well and feel like bragging, you can share your best trades in your favorite Discord or Telegram group. Detailed webhook instructions are available for making this work in a matter of minutes. No programming skills necessary. In order to send your trades to ChartObserver, you'll need to click on the 3 dots next to the strategy and choose Add an Alert on Exit Strategy. The message body should be copy-pasted from the ChartObserver site under your webhook instructions. However, you can change some values to be dynamically filled by the strategy. This is an important step for sending the exact percentage of the position to sell at each order. Lastly, you'll need to copy your unique webhook URL from the ChartObserver site and enter that here. The webhook signal you just created will be visible in the alerts list to the right of the TradingView screen. It can be found by clicking the alarm clock icon. If you hover over the alert, the details of the webhook alert message can be verified for accuracy. You will also notice the date that it was last triggered, if the alert has gone off before. Now that you have a way to test this strategy, let's take a look at a losing trade and how we might take advantage of 3 stop losses to ladder out of this position. Let's assume we entered a trade here, and shortly thereafter, the price takes a 12% nosedive. Using this exit strategy, you will want to once again identify the bar index of the entry trade, or your average entry amount. Once you have entered that into the strategy settings, you should see the 3 trailing stops appear on the chart. One at the yellow line, one at the orange line, and one at the red line. In this example, we are selling 20% of our position, then 70%, and then finally closing the trade before further downside. Let's open the strategy tester again and see how this compares to the 12% drop if we held this position. Understandably, we took a loss on this trade, and that number is just over 5%. If we make some adjustments, the loss is reduced to slightly more than 4%. This involved increasing the first sell to 50% of our position. The second sell is 75% of the remaining position, and the final sell closes 100% of what's left. Please keep in mind that nothing in this video is financial advice, and we are not claiming that this strategy is a foolproof solution to losing less money in every trade. It's not. Some people would have held their position, for example, and that could have resulted in more downside. But then again, they may have taken profit later at 4%, so it's impossible to say which is the best strategy. Trading is risky, and there are no guarantees, which is why we suggest using play money over at ChartObserver, so you can become familiar with the results of strategies like this one without the financial risk of losing real money. Thank you, and if you like this video, don't forget to hit the like and subscribe. It will really help us get this content out there.